How's it going, guys? My name is Jared Ace, and welcome back to MoneyMetEish. This is the March EasyEquities portfolio review, and since the end of March also signals the end of the first quarter of 2022, I will also be sharing the Q1 results for the portfolio as well. As always, please remember to give the video a like and share it with your friends to help the channel grow and to show more people that you can beat an actively managed fund at a fraction of the price with easy equities. That being said, and just so that I don't get sued, this video, like all my videos, is for edutainment purposes only and should not be used as financial advice or the basis of any financial decisions, as I'm not a financial advisor, this is not financial advice, and although this is currently a blank cup, it won't be for long. So if you would like to get your share of the blank cup, put your company's logo on it before it disappears, contact us via email at MoneyMetEish@gmail.com. Now that that's all out the way, let's get on with the video. The MoneyMetEish portfolio has been through the most this year, guys. It's really lived up to the Aish part of the name so far. Don't let the zoomed-in March results fool you. On a year-to-date basis, things are still rough. Although the portfolio is up 13% month-on-month, it's still down over 13% year-to-date. Also, on the EasyEquities app, the value is the total of all the money invested and doesn't take the transfer fees, etc. into consideration. And when we adjust for fees, we've actually lost 1,200 Rand in March. And when we look at the portfolio year to date, all of the contributions that we have made so far this year, and then some, have been lost. And the portfolio is currently 9,700 Rand lower than it was on the 1st of January on a contribution and fee adjusted basis. So this year has not been the best for the MoneyMetEish EasyEquities portfolio so far. We covered some of the macroeconomic reasons for this massive drop in the February video, and I'm not going to go over that in this video, but you can watch the February video over here somewhere. But the recent relative Rand strength of late is a new factor which has contributed to the lower overall value, since there is a fair amount of the portfolio held in US dollars. Speaking of dollars, let's have a look at the US account. The USA account saw a month-on-month gain of 1.82%, but it is still down a further 5.5% year to date. January and February were really massive knocks for the portfolio, and the beginning of March was really not any different, but this did allow me to sell out of a number of lower conviction holdings and use those funds to purchase more of my higher conviction companies. After selling 3 holdings in February, I sold 1 in March, and that was Altria, which I sold at roughly a gain of 19%. I used the proceeds from that sale, as well as some other free cash I had in the account, to purchase more shares in Costco, Alphabet, Microsoft, Amazon, Cloudflare, and Nvidia, which I did in small increments throughout the month. The winner for March was Tesla at 23.4%, while the winner for the quarter was Lockheed Martin, up 24.5% year to date. The loser for the month was Coca-Cola, which is actually still up for the month, even though it was only 0.05%, so none of the US holdings ended March lower than the month before, which is nice. We see a completely different story year to date though, where we have 8 of the 12 holdings down by at least 4%, 3 of which are down by 9% or more. The biggest loser of the bunch is BlackRock, with the investment manager / company that owns the whole wide world down roughly 16% year to date, despite being up 5% in March. BlackRock is not a bank, even though it owns a large portion of a large number of banks all around the world. And energy companies and transport companies and Apple and Berkshire Hathaway and even Old Mutual. With $10 trillion in assets under management, you can bet that they own just about everything. Since they're not a bank, they are not positioned to benefit from the rising interest rates the same way that traditional banks are. And even after falling as far as it has, BlackRock is still trading above its 5-year average PE ratio. We're sitting on about $113 of free cash in the account at the moment, and I would like for that to be sort of the minimum amount that we have in cash in the account at any one time, so that we will be able to take greater advantage of the current volatility in the US markets. I don't have anything planned for that money at the moment, but I will be looking to add more to our current holdings before adding any new companies to the account. Now let's have a look at the star performer this month, the ZAR account. The ZAR account currently has a value of 11,900 Rand if we exclude the crypto, and has gained a massive 37% month on month and 16% year to date. The turmoil in the rest of the world at the moment has really played out very nicely for South Africa so far, and the JSE has really had 2 stellar years. The Reserve Bank did increase the repo rate by 0.25% this month, which is the second such raise so far this year, and we'll have to see how many more interest rate hikes South Africans could be in for over the course of the year. I really thought that the raising rates would have more pressure, would put more pressure on the stock market, but that hasn't really seemed to be the case, and we haven't seen the market weakness that I thought we would have yet. The winner for the month is also the winner year to date, and that is Afine Investments Limited, with the specialty REIT gaining a massive 22.5% and 42.8% respectively. We're still waiting for the first set of results, post-listing, and news regarding the dividend, but I did just email the company, and I will post the response I get as soon as I hear from them. The loser for the month is Shoprite, who, like Coca-Cola, was actually up this month, just not as much as everybody else with its 2.5% gain. The company continues to innovate and experiment with different store layouts and concept stores, and has now just launched a brand new, smaller, community-focused Checkers store, which I suspect will eat even more into the lunches of its competitors. No pun intended. These new stores have a Starbucks. The loser year to date is Purple Group, with the EasyEquities co-owner down 0.3%. There has been a rally in the share price in the last week in anticipation of the results presentation this month. EasyEquities also managed to receive 1 billion Rand in deposits in March. 1 billion Rand in 1 month. It took the company 32 months to reach their first billion in deposits, and they are now doing that same amount in 1 month. It is just incredible. Easy Properties also launched their first commercial building this month. Purple Group also announced the appointment of Rish Tandapani, who is based in Malaysia and will continue to work from there, while CEO Charles Savage is on a mystery business trip to a very nice looking tropical land. Could this be the comings together of EasyEquities Asia? We'll have to wait for the report to find out. There are 2 companies I am looking at adding to this portfolio as soon as I'm able to deposit funds into the account. The first is Renogen. I feel like I've done a decent amount of reading, watching, and listening, and Solve Fairy's Twitter space the other night was the final push that I needed to decide, okay, fine, I will invest in Renogen. The other I have not completely looked at yet, and there will be a video on it soon with the final verdict on whether it makes it into the portfolio or not. If you have any guesses on what that company might be, let me know in the comment section down below. If you get it right, I'll give you a shout out in the next MoneyMetEish YouTube video. And now on to our final account, the tax-free savings account. The tax-free savings account, as it makes up 2/3 of the total portfolio, has a great influence on the total value, and although the individual holdings in the other 2 accounts have had really strong showings this month, only the Nasdaq 100 ended March higher than it started, making it the obvious winner for the month, ending March up 0.7%. That gain does little more than slow the losses which have flowed out of this account like water since the beginning of the year. It's really been a very rough year for our tax-free savings account, and even at its 16% loss we've incurred on the Satrix Nasdaq 100, it still doesn't make it the loser year to date. The winner year to date is the Sentio Hikmah Sharia General Equity Fund, which has gained 0.5% this year, and I would like to take this opportunity to wish all of our Muslim family members, friends, and MoneyMetEish community members a happy, blessed, and prosperous Ramadan. The Signia 4th Industrial Revolution ETF is the loser both for this month and year to date. It is down 3.6% in March and 18.8% year to date. I would love to speak to somebody from Signia so that they could just unpack the ETF for us a little bit better and maybe show me what I'm missing, because I just don't see where the value is going to come from in a high interest rate environment. So if you would like to see that happen and like to hear me speak to somebody from Signia about this ETF, comment down below and we'll get in touch with them. The overall portfolio winner for the month was Tesla, up 23.4%, while Affine was the year-to-date winner, up a massive 42.8%. The overall loser was both for the month and for the year, and it was the Signia 4th Industrial Revolution ETF. I'm in a strange place with this ETF at the moment, if I'm being honest. I'm down 18%. I really, on the one hand, I feel like I should put more money in because if it rises, then we bought the dip. But on the other hand, I just don't see where the value is going to come from. So I've lost too much to sell and I don't see where it's going. Signia, please, come and speak to me. I'm sure I'm not the only person in this position with this ETF. Put our minds at ease. In other interesting news, there are a few matters which we will be following closely this week, and they mostly have to do with Amazon. Amazon workers at the company's New York distribution center, JFK 8, voted to unionize on Friday, while a similar vote in Alabama failed the same day. The passing of the vote to unionize is most likely going to be the beginning of a very long and drawn-out legal saga between the company and the newly unionized workers, as Amazon will undoubtedly want to stop this from spreading to the rest of their US-based workforce. A little closer to home, the company has been ordered to halt construction of its Africa regional hub by a Cape Town court who says that the company did not properly consult with the indigenous people who consider the site that this hub is going to be built on to have historical significance. There has been growing global outrage against the company for well over a year now, and this could be a very volatile time for Amazon, which makes up a little over 4% of our total portfolio if we don't consider ETFs. That's it for this week, guys. Let me know how your portfolios fared this month in the comment section down below. If you liked this video, please give it a like, share it with your friends, your family, your pet fish, and subscribe to MoneyMetEish to see more videos like this. You can also follow MoneyMetEish on Twitter and Instagram and everywhere where MoneyMetEishes are. Thanks for watching and happy investing.